Hello, everyone, and welcome back to Market Minds introductory series. Today, we're going to be looking at emotional intel. Now, I know we already looked at sentiment intel, and this might seem similar in the name, but as we can see at the top here, it's based on earning transcripts and also other corporate action, meeting, etc. transcripts. Now, we process these as soon as they come out within the same day, usually within the same hour, and you land on this page when you first enter it. This is the market overview of the sentiment or management emotion. It shows you the CMP. It shows that market emotion is declining this quarter with the recent releases. Stocks scored for this quarter is at 224 right now, and average sentiment seems to be just above average. Confidence is high, but hedging is also high, and of course, fear and greed is also shown here. We also have the by sector emotion, management emotion breakdown, which you can have a look at here. The biggest sentiment improvers in the recent quarter and the biggest decliners. Now, this sentiment improvers and decliners on its own is a decent bet, but what the real magic behind this is the quintiles. You can look at the top or the bottom quintile. Now, these are the best and worst management emotion stocks. What we have noticed in our backtest is that the top and bottom quintile in specific uh, show about a 12 to 13% difference in movement over any given yearly period. So that's 252 trading days. The composite of this top quintile should give 12 to 13% better returns, or in absolute terms that means 12% more than the bottom quintile. Now, of course, each and every stock you compare won't be doing that. So the play here is, doing slight rebalancings according to these quintiles. But we do also have stock cards for those people who want to trade the event itself or the few weeks or months following any event that's been pretty big or anything like that. So you can just go here and let's perhaps see one with recent good results, such as Idea. Let's look at Idea. So you can see the composite score and the dashboard we have here. The sentiment has improved. There's a high confidence. There is some hedging, but all in all, we see a green composite score here, which suggests that it is doing decently. Very positive, marked up top. And with the per stock card, we can also see here the quarter ended trajectories for whenever there were new transcripts to run through our pipeline. An idea has been mostly positive for the recent times. Let's look at another one. Let's say JK Tire, because this one had a really good score. As we can see here, sentiment 9, 100% confidence, low hedging. Although it's increased quarter on quarter, but the sentiment and confidence scores are much higher. Composite again 80, almost at the very limit. The best sentiment it's seen in a long, long time. And we also have the back test here. So for this particular stock, given its beta and how it usually moves, with this emotion scores in the past quarter, we can expect these returns. So it's per stock or per type of stock rather. And we have the 60-day forward 126 and 252-day forward returns given here by the stock as well. I do want to add one thing. As with anything that we offer here, my best suggestion is combining it with other aspects. For example, if I just go into the secondary intel here on the side, and let's look at for example the regime. We can see here in the regime most sectors are currently bear or big bear. So now if you go and look at a good emotion card and a good sector emotion card, and you buy that stock and wonder why didn't it work, maybe the sector breadth regime was negative. So confluence amongst these different uncorrelated data sources is where market mind really shines, and which is what I would suggest you all to do. Anyways, I hope you have a great time trading with this stuff ahead, and thank you for watching. See you in the next one.